Hello and welcome back to Money Never Sleeps. My name is Mac from M&A Wealth. If you'd like more information about what you hear during the show, give us a call at 866-973-3627 or visit us online at mnawealth.com. And while at my website, click on the page to check out past shows and subscribe on Apple Podcasts or Spotify. The last few weeks of 2024 are also a great time of year to meet with your financial services professional to see if you need to take any end-of-year financial steps to improve your overall financial strategy. By taking these steps, you'll enjoy the powerful 1-2 punch of buttoning up 2024 and making any necessary strategy adjustments before the calendar rolls over to 2025. A Bankrate article, Greg McBride's End-of-Year Financial Checklist, 15 Tasks to Complete provides many insights and tips that I think today's listeners can put into action for themselves. Step 1 on your year-end checklist is going back through your spending habits during the previous 12 months so that you can build an even stronger and more useful 2025 budget. 2024 was a year that many people began to feel some relief from the high inflation and interest rates of the previous few years, though prices remained relatively high. Filling up the family car, pizza nights, and family trips to the zoo continue to take a significant bite out of many household budgets. When looking back at your 2024 spending, does anything surprise you? Did going out to lunch every day amount to more than you'd anticipated? Did you blow off a couple of contributions to your emergency fund so now you're left with an amount of money you know isn't enough? If your review of your spending habits reveals some things that make you wince, don't beat yourself up about it. Everybody's spending gets a little out of whack now and then. Work with your financial services professional to rework your financial strategy a bit and move into 2025 with a renewed focus. Next, it may be a smart step to consider how much progress you've made on paying down your high interest debt. What did your debt picture look like last year at this time? How much debt do you currently have? Is it more, less, the exact same amount? If you're closing in on the end of 2024 with the same amount of debt or even more debt than you had last year, it's probably time to come up with a new strategy before 2025 begins. Don't forget that debt is really nothing more than a financial weight around your ankle that makes it more difficult for you to move forward and achieve your financial goals. And as you work to reduce or entirely pay down your debt in 2025, be sure to prioritize tangible steps like reducing expenses, even if you don't do so for a certain chunk of time. Cutting back on your spending, even if it's only for a few months, can supply you with the extra money you need to take a large bite out of your debt. From there, you should determine if you've met all the savings benchmarks you set for yourself at the end of 2024. If you haven't reached them, focus on making some changes before January 1st. Having adequate savings brings many benefits. For example, heading into retirement with ample savings will make it easier to maintain your lifestyle. Also, a solid amount of savings can also help you manage some of the emergency spending that would otherwise end up on one of your credit cards. If you discover that the snowblower has gone permanently kaput 2 days before a forecasted blizzard, you're going to have to go get a new one, like it or not. But once it comes time to pay for it, would you rather use your debit card or your credit card? The answer should be obvious. While it's never a bad idea to have significant cash savings, you should also meet with your financial services professional to analyze your current contributions to your retirement accounts as well as different investment scenarios that may supply you with retirement income. If you're seeking to max out your 401k, be sure to make any last contributions prior to December 31st. If your company has a holiday or year-end bonus, think about putting that money in your 401k. And if your company offers a 401k match and you haven't already maxed your account out, doing so is even more critical. Its next recommendation is to meet with your financial services professional to discuss whether a Roth conversion would be a solid move for you. As the article explains, if your income went down in 2024, you may be positioned to utilize your lower tax bracket by converting pre-tax retirement accounts like a traditional IRA into a Roth IRA. With that, you pay taxes right now for tax-free withdrawals during retirement. Bear in mind, though, that while Roth IRAs may be an excellent move for some people, they may be the wrong move for others. For example, if you're confident that you'll be in a lower tax bracket in retirement, a Roth may not make sense for you. Next, you may want to review your current asset allocation and then rebalance your portfolio, if needed, before the close of the year. While inflation cooled significantly in 2024 from its pandemic-era highs, it still created market volatility this year. Accordingly, you and your financial services professional may want to closely consider your current investment mix. Reworking your current combo of stocks, bonds, cash, and other investments last in the year may put you in a good spot to begin the new year with renewed focus. Let me add, though, that our 30-minute show doesn't give us ample time to really dig into all the things you need to know about investing. So I strongly recommend working with your financial services professional on your investment goals. Reviewing your named beneficiaries before the end of the year is another solid thing to cross off your to-do list. Adding or removing a beneficiary on your accounts is an essential part of making sure your desires are followed and that your assets end up exactly where you want them to. Also consider that the beneficiaries you've listed on your policies take precedence over your will. So be sure that the beneficiaries you've listed on your policies and in your will match. Moving on, don't forget about the importance of harvesting tax losses. As the article explains, you may be able to write off some investment losses. The IRS calls them capital losses for income tax purposes, and they may reduce your taxable income for the year and provide you with a modest tax break. You should note, though, that your losses must be realized, which simply means that you must have sold the stock to qualify for the deduction. Furthermore, you must take this step before the last trading day of the year. Be sure to also go through your flexible spending account balance before the end of the year. If you're utilizing a company-provided FSA, be sure you have a full picture of how much you have left to spend before the end of December, because that money is use it or lose it. Some companies offer a grace period that generally ends in the middle of March the following year, handing you an extra 2.5 months to spend the money you saved during the current year. But again, if your company doesn't provide a grace period, you must spend down your FSA before the end of the year. Researching changes to your company-provided benefits and then completing the open enrollment process is another solid move to make before the year ends. The year's final quarter is typically the beginning of open enrollment, which is your opportunity to choose to change your benefits for the next year. If you haven't already done so, take the necessary time to review and make sure your company offers everything you need. If you have any questions about the new generation retirement system, visit my website at mnawealth.com or call my office at 866-973-3627 to discuss how my team might be able to answer your questions and address your concerns. It's our goal to help you prepare for the retirement you've worked so hard for.
Disclosure: all matters discussed during the show are for informational purposes only. Opinions expressed are solely those of M&A Wealth and staff. All topics covered are believed to be from reliable sources. However, M&A Wealth makes no representations as to its accuracy or completeness. This commercial shall in no way be construed as a solicitation to sell securities or advisory services to residents where permitted. Topics should be discussed with your individual advisor prior to implementation. Advisory services offered through M&A Wealth, a registered investment advisor in the state of Texas. Insurance products and services are offered through PNC Life Insurance Agency, an affiliated company. M&A Wealth and PNC Life Insurance Agency are not affiliated with or endorsed by the Social Security Administration or any government agency.